Friends, today I'm going to talk on three subjects. One is National Pension Scheme. This is a very lucrative scheme and it is beneficial to an SSE who wants to invest the money in a tax saving scheme, which is more than 1,50,000. And I'm going to talk later on CTC planning. No, I'm not going to talk on CTC planning, but I'm going to talk on few of the changes in ULIP, the further changing in LTC allowed during the year because of pandemic, and the further changes which I'll discuss later on. So there are four major changes. I'm going to discuss it for the purpose of specifically to salary and small employees. And there are PF, there is a major breakthrough in favor of small SSE and against the large rich SSE, which is made by the. I'm C. Nitinmpathak, Chartered Accountant by profession. I'm a president of ISACA Chapter. You can reach through me through email or WhatsApp. We are regularly conducting a Zoom meeting. Next meeting is on Friday, which I'm going to discuss. Now, let us go to specific subject, National Pension Scheme. National Pension Scheme is launched by Government of India, regulated by PFRDA, Prudent Regulator, which regulates this. They have managed, they have bifurcated into two parts. Stockholding Corporation of India function as a custodians, which take record of the fund they receive, from whom they receive, what is the accretion. The management is done by Stockholding Corporation, and funds are managed by funds, well-managed fund of public and private sector funds. There are tier 1 and tier 2. Tier 1 is for tax saving. Tier 2 is a mutual fund. Generally we invest, but it is a very low cost fund, very versatile. Once you apply, you need three things. You need PAN card, you need Aadhaar card, and then you need a bank account. On the basis of this, you need an email ID, your mobile number. Once this, your PRAN is collected. PRAN is 12 digit is created, which is online. You can use it anywhere. There is no location. This is the unique advantage. It's a well-managed national pension scheme. Like post office, you have to go to a specific place. It is not so. Basically, individual can contribute between 18 and 65. If you're above 18, you can invest. Up to 65, you can invest. After 65, you can put the money up to 70. After 70, you need to compulsory withdraw. There is no joint account in joint account in NPC. It is only in NPA. NPA individual account only. There is no power of attorney allowed. Minimum investment is of a 500 up to the age of 65 years of age. Only rupees 500 are can be invested. And on the basis of that, unit is allotted. You get a certificate. The amount invested in national paving scheme would be eligible for the deduction under ATCC D1 up to rupees 1.5 lakh, ATCC D1B up to rupees 50,000. जो 1,50,000 ATCC D1 में invest करते हो, that has a limit. That limit is 1.5 lakh, which is inclusive of ATC, ATCCC, ATCCC D. Only 50,000 ACCD 1B, which is extra. So anyone who are not using ATCCC can contribute more than 50,000. Those who are contributing in ATCC, which is limit is finished, they can invest additional 50,000 here. This is a special scheme where even employer directly contributing to NPS fund, it would be employer would be allowed to have a deduction under their as an employee contribution in the books of employer. Employee will not be liable for tax if it is less than 1,50,000, subject to 1,50,000 plus 50,000 2 lakh. if it is below 10% of their basic and DA. Okay, so employer can contribute up to 10%, maximum 2 lakh. Tier 1, Tier 2, I've already said up to 90, 60% of contribution are permitted to withdraw from salary employee. So if you have invested today, there are specific reasons for which you can withdraw, and up to 60% of your contribution you can withdraw. Rest 40% you need to buy an annuity compulsorily. So once you start contributing to NPS, you can withdraw at any time, but maximum 60% you can withdraw, 40% you have to buy an annuity. On annuity, you will be entitled for pension after 60 age. The taxability under ATCCD is EEE. EEE if you die, EET if it is you receive annuity in the years to come. So number means investment under ATCCD 1,50,000, ATCCD 1B another 50,000, 2 lakh. Accretion is exempt. Withdrawal before 60 years, 60% is taxable, 40% is compulsory. You have to buy an annuity. Withdrawal at the time of maturity, 60% accumulated is exempt. You can withdraw between 60 to 70, 40% you are compulsory you have to invest in annuity, and the annuity is exempt, but accretion, the interest or accretion received by you would be taxable every year. So EET, exempt when you invest, exempt accretion, taxable when you receive. 1,50,000, 50,000 accretion, taxable, 60% non-taxable. Withdrawal from no restriction on repatriation of fund, whether annuity or lump sum. Before 65 years of age, up to 60% of contribution allowed to be withdrawn subject to certain condition. Closure of account before 60%. Before 60% is allowed to be withdrawn. Rest needs to be kept in annuity. Between 60 to 70, invest 40% of accumulated saving to purchase annuity on attaining age 60. You can choose greater than 40. The remaining capital can either be withdrawn in a lump sum for buying annuity, or otherwise at the time of maturity of 70, you are compulsory your money is withdrawn and you need to keep it in annuity. At the time of death, exempt. Partial withdrawal up to 60% and any time is withdrawal. The condition for withdrawal is there are certain condition is that for the purpose of this you are withdrawn. Frequency of partial withdrawal is 3 times in the whole period of your NPS. Minimum gap of 5 years between one withdrawal and the second withdrawal. There are certain schemes devised where I also mentioned the return also, but one is ICICI Prudential, HDFC, Kotak Mahindra, Reliance Capital, SBI Pension, UTI Retirement, and LIC Pension. Every details of their quantum, मतलब AUM, मतलब corpus plus उनका previous साल का return वो भी इधर दिखा रहा है. Now there are 3 choices you are allowed to make it. You can invest in equity, you can invest in a corporate bond which is medium risk, and there are low risk you can put in government security. So there are basically 3 kind of investment under the investment option available. E means risk share is always risky. It can go up or it can go down. Class C, medium risk, low risk. Now, when you make a choice, you are not allowed to invest at any age more than 50%. Corporate bond 100%, 100% से ज़्यादा हो भी नहीं सकता. Auto choice. If you don't mention anything in choice, your choice is always qua age. Let me go up to 35. When you are below 35, 50% you can invest in equity, 15 to 30% in medium range, and 20% is class G, means government security. So this will go on reducing 2% every month and increase by 1% in other schemes. Okay. I'm not going into that way. Invest up to 55. When you're above 55, only your 10% are allowed to be in equity, 10% in class C means corporate bonds, and rest you have to put it in government security only. So this is the data on 22nd January 2021. First is E equity, C middle one is of medium risk, and last one is no risk government security. If you look at the fund, there are 6,200 crores in HDFC pension fund, ICIC 2,781 84, SBI pension fund more than 5,322. The return you look into average return, you look at as on 22nd January 21, it is almost more than 10%, and it goes up to 15%. And 15% on a fund size of 6,200 crores is a huge return. If you go to medium size, medium risk, there also you see that average you're getting more than 9%. And if you go into last thing, no risk, there also you're getting a very good return. So I think the returns are always really good here. Okay, let me go back. Now, this is another slide. 1 minute. This is the latest one. This is the past one, which I don't talk here. But return is always good. The conservative investor who has invested in equity 20%, corporate bond 30%, gilt 50%, on ICICI Prudential Fund, they got around 11%. In LIC Pension Fund, they got around 12% return. It's a huge average return into 1 year, 6 months, 2.69, 1 year, 12.68, 3 years, 11.51. 11.51 over a period of 5 year cumulative is a handsome return by all standard. Balanced fund, 12%. Gilt fund where equity is 50%, you're getting 12% return. 12.72 is a huge return, around 13%. So almost your income, your corpus is double in less than 6 years. Absolute return. So NPS plus you get a tax return advantage. Suppose suppose I'm a taxpayer on the range of more than 30%. So if I invest 100, I'm getting my tax back 30%. And I have to pay tax, 60% is exempt. Okay, 40% I have to again invest in annuity. And once I receive at the age after 70, I think after 70, if I don't do a business, I may not need to pay today's rate, maybe up to 10 lakh. I don't have to pay tax by investing and other things. So this is one thing. Thank you very much. Now I'm going to go another slide. Before that, you go to a blog. My blog address is nitinmpathak.blogspot.com. My YouTube channel is there. 26 February 6:30 p.m. free Zoom link on AI, artificial intelligence and its race, opportunity and threats, and registered opportunity and threats. AI and its race, where India is, where China is, where Europe is, and how it is going to implement a core industry, core people, how it will an opportunity and how it will a threat, how it will make imbalance, how 13 as per PwC report, 13 trillion economy is through over a period of 13 years. So per annum, 1 trillion economy is going to be a huge, huge task for anyone to accommodate and understand and use this. Now I'm again going to talk about these PPTs for live travel concession, United Link Insurance Policy and Employee Provident Fund, which I'm going to talk on this slide. This is a recent budget changes which will helpful for anyone how to use LTC, how to use EPF this year, and how EPF is going to affect the other person this year, next year. This is the understanding which any other one who has a question on any budget, we have a blog written on that. You can come I'm a president of ISACA chapter. This is the email ID and my WhatsApp number. You can contact us 9825804094 and nitinmpathak@gmail.com. Detailed CTC planning is available on blog. Our other presentation is also available in YouTube. See Nitin Pathak. CISA Crash course for those who are doing CISA that is done on Zoom. Person who wants to do CISA can join, can have a detail in blog. 26 February, I'm going to talk on Zoom link on seminar and its raise opportunity throw. You can register through blogs. Today, again, I'm coming back to the subject, exemption for LTC cash scheme. Section 10(5) provides exemption in respect of value of lead as assistant received by or due to an employee from his employer, former employee for himself in his family in connection with proceeding to leave at any place in India. LTC is available in a block of 4 years, one for hometown, the other one for other than hometown, in a block of 18 to 21. And the amount you spend for the purpose of traveling is available, and you and your family, dependent family, can go, including parents, including sibling, but they should be dependent. And second class fare or airplane fare section, there are rules which I'm not going to discuss, but because of COVID, the travel is stopped. So government has come with the care scheme. So there is a specified period is provided, specified purpose for which the expenditure made. If you do it, it would be allowed as expense limited to 36,000, one third of the expenses. I'm going to detail, but once you use an exemption in this case, in one SSC, you cannot use in other SSA for any other purpose. This is a clarification they have made for the purpose of LTC. So those who have not availed LTC as a case scheme can use this during this year. The date is prescribed. I'm going to talk it. Second provision is added for value in lieu of LTC, and I've already discussed. The clarification is made that if once you are entitled, you cannot entitle again. The block is 28 to 18 to 21. Specified expenditure. What are the expenditure here? Any individual, a member of his family during specified period of goods. Period I'm mentioning, man. If I buy goods, say I buy fridge, I buy laptop, I buy services for buying some services, education services or any services which are liable to tax more than 12%, then then GST has been paid by the purchaser. GST is paid by the purchaser. Then uh, so uh, so we are on LTC cash scheme. So the period between which you can use the money is 12th October 2020 to 31st March 2020. So here today, if you look at today is 18th March, 18th February, you got a time to go and have it. The exemption should be restricted to 36,000 or one third of the specific expenditure or actual amount received, whichever is less. So nutshell, government has provided an LTC to induce the expenses to be incurred on more than 12% GST rate item you can purchase. Thus, there would be an increase in this thing. Tax anyway should be there and it should be received and nobody else can use it. These are the main crux which I would have taken detail, you can read it. So in nutshell, 36,000, one third amount received, and you have to pay either goods or services for you, your family, and more than 12% GST should be payable on that. The most provision, this is provision against the rich person who were investing more than 10% or most of their salary or many of the salary for the purpose of PF, Provident Fund, and on the basis of that, their interest accrued on that become tax-free. Only interest which is tax-free until we know, general people know, is a PPF. But this interest is was also tax-free. Let us go to section itself. Now this has been restricted after 1st April 2011 से मुकेश अंबानी साहब ने अपना जो 5 करोड़ का सैलरी उसमें से 1 करोड़ वो पहले ये फंड में प्रोविडेंट फंड में डालते थे तो दैट इंटरेस्ट वाज एग्जाम्प्ट नाउ इट वुड बी ही वुड बी entitled rupees 2.5 lakh only on 97.5 lakh interest accrued to it would be liable for tax. There would be bifurcation of old fund and new fund which are eligible within limit of 2.5 above 2.5 and which are the fund which is available. Let me talk. Section 10(11) says that provides that exemption any respect of provident fund, any withdrawal from that would not be liable for tax. Section 12 provides for exemption with respect to accumulated balance due and becoming payable to an employee participating in a recognized provident fund to the extent provided in Rule 8 Part A of a fourth schedule. This exemption without any threshold only. Now there was no threshold limit from this year onward for after 1st April 2021. If you invest more than that, it will not be available for that. ULIP. People were investing in ULIP and they were considered as exemption. As you know that 1010D, अगर आपका प्रीमियम 10% से ज़्यादा है तो उसका जो भी इनकम होता था वो टैक्सेबल नहीं था. That was now made removed, and any ULIP contribution made by you, if it is more than 2.5 lakh per annum, after the policy which you purchase after 1st February 2021, the cap would be applicable. This is order operative. So now that the investment which you made more than 2.5 lakh after this year, after the ULIP policy which you bought after 1st February 2021, it would be considered as capital asset and would be liable for short-term, long-term gain under section 11.12 and under 11.12, 11A. I'm not going into detail for this section, but it's not equal to one policy, but more than one policy. In aggregate, if it exceed 1.2.5 lakh. Whole discussion which here written, I'm not concluding because it is an academic discussion, but in nutshell, which I already covered. Until today, there was a judgment, Gujarat High Court judgment says that any employee contribution deducted by an employer not paid in the during the due date of respective payment, but if they paid during at the end of the before the due date of filing return, they were entitled to deduction under section 36(1) 5A. Now government has specifically provided that PF and ESI, if it is due and not paid, you have to, it would be added to your income. Even if you paid after due date, it will not be allowed as an expense. This has become a strict provision. With this lecture come to an end. Any question on anything, you can email me, call me. My blog is there. My YouTube presentation is there. This link would be available. PPT as well as this available on YouTube. I am Nitin Pathak, President of ISACA Chapter. Those who want to do CISA course, we are running a crash course. Anybody wants to do CISA, CISM, or any such professional courses, I would guide free of charge as a ISACA Chapter member of Ahmedabad. Thank you very much. Thank you so much. Thank you. Thank you once again. See you.